Welcome, class. We are going to look at question 2 of this paper. I told you these are university paper. So Mr. Otieno started a business as a fishmonger on 1st January 2022. His transaction during the month of January 2022 was as follows. So January 2nd, 3rd, 4th, all the way to January 29th. And then you are required to come up with the journal entries to record the above transaction and then post them in the ledgers. Okay, so we'll just go straight to the journal entries, come up with the journal entries, and for journal entries, what is important is the debit and the credit. So just let's make sure we capture the debit and the credit. This will be sufficient for us. So debit, then credit. Then of course you can have particulars. Not a must to have the date, but for the sake of it, let's have the dates here so that we have date, particulars, debit and amount. And then of course these are journal entries, so you write journal entries. So we got the first transaction, which was on January 2nd, and January 2nd opened a bank account and deposited 40,000 while cash in hand amounted to 10,000. So this means that this is capital. He started business on January 2nd with 40,000 in the bank, 10,000 in cash. So 50,000 capital. Now, just before we start posting this, it's important that we mention something about the debit and credit treatment. For assets, we normally, let me just write somewhere here. So for assets, these are just guidelines. For assets, an increase, then we have a decrease. So for assets, if assets are decreasing, we credit. So assets increase, assets increase with debit, decrease with credit. If you're talking about liabilities, an increase in liability with credit, a decrease in liability with debit. If you're talking about expenses with debit, incomes with credit, so incomes are credit entries. And then we also have, what else? Assets, liabilities, expenses, incomes. I think let's work with this. But this is just a guide. So we'll come back here. Look at opened a bank account and deposited 40,000 while cash in hand amounted to 10,000. So cash and bank, those are assets. So we simply debit. And when coming up with journal entries, always start with the debit side. So we come here, we say cash account, 10,000. Then bank account, 40,000. And then of course, this is a capital account, 50,000. So we started with 50,000 capital. That's how you record. Then you simply come up with a narration, and from the narration you say being capital introduced into the business, That is the narration, and you can put the date as being 2nd January that year. Which year was it? 2nd January 2022. So that is the journal entry. You just pass it like that, then you'll be good to go. So then that one is done. That is the first transaction. So you come to the second one. And remember, capital is a liability. That's why we credited. I told you liabilities, an increase, you credit. So let's go to the next transaction. January 3rd, paid rent in cash 3,500. Paid rent in cash 3,500. Rent is an expense, so we simply debit. We said an increase is, and always start with the debit. So rent 3,500. Cash is a decrease in cash because cash will now go to the rent. Cash 3,500. So being payment of rent from cash account. cash account. You just narrate something. This will be on 3rd 1/22, like that. So simple as that. Then you go to January 4th, purchase fish on credit valued at 36,000 from Kisumu Cooperative Society. Purchased fish on credit at 36,000 from Kisumu Cooperative Society. So we bought fish on credit from Kisumu Cooperative Society. When you buy goods on credit, then we have to have the name of that person. He's a creditor, yes, but we have to have his name. So we'll come here and say purchases. When you purchase, you know, goods are coming in. So we simply say on 4th January 22, purchases. So we debit purchases to show that goods are coming in. Debit purchases, how much? This is 36,000. That's 6,000. And then we credit Kisumu Cooperative Society. Cooperative Society with that 6,000. Why? Because they are now creditors. Being purchases on credit from Kisumu Cooperative Society. That's the explanation. So you always have to put a simple narration. Always start with the debit and then credit. So that's how it will go. Then on January 6th, sold fish worth 58,000. When you sell fish, 58,000. When you sell fish, 58,000, it means they have not told us if they are selling fish on credit or cash. So we'll assume that they have sold the goods in cash. So sold fish 58,000. We simply come here and say January 6. What are we going to debit? This is cash that is increasing. Cash that is increasing, and cash is an asset. So because cash is increasing, we simply say 6/1/22 cash account 58,000, and then sales because stock is reducing. When we sell, stock reduces. So we put 58,000 on the credit, and we simply say cash sales. That is the narration. Always remember to have a narration. Always start with the debit, then the credit. So then number January 7th, purchased office desk 2,700 and paid by check. Purchased office desk. Now this is not purchases. This is not purchases because our business is not to sell office desks. So this is an asset. So we simply go to the furniture account because this is furniture. Furniture we debit because there's an increase, and then we again reduce the assets by 27. That is money in the bank reduces by 27. So we'll simply come here and say January 7th, January 22. We say furniture account 2,700, and then bank account 2,700. And then you simply narrate purchase of furniture by check, and we'll be done. That will be done by that. That's how it goes. Then you go to January 9th, deposited 25,000 in the bank. From where? Definitely from cash. So January 9th, bank increases, cash reduces. When bank increases, we debit. When cash reduces, we credit. So January 9th, and we call those kinds of transaction contra entry. So bank account 25,000, cash account 25,000. So we say banking 25, banking just get the wordings here. Deposited 5,000. Amount deposited, being amount deposited in the bank, being amount deposited in the bank. That is the narration. So we close that like that. That's how we close. Okay, let's move on, and that's control entry. So we move on with continue with our journey. So on January 10th, purchased fish worth 20,000 from Kola Fisheries and paid half of the amount by check. So it means half of the amount was paid by check, half remained as credit. So purchased fish worth 20,000. Because we are purchasing, purchases will increase, our stock will increase. So purchases 20,000, we debit purchases, then we credit bank 10,000, and then we credit again because we paid half of the amount by check. Paid half of the amount by check. So Kola Fisheries remained as creditors. Kola Fisheries remained as creditors, the amount of 10,000. So being purchases paid by check and on credit, just like that. And you put the date. You need to show the date. So let's close that. The date I think was on 12th January. So you might want to show the date. I think 12th or 10th. That was 10th. So we change to 10th. Then on January 11th, sold fish 15,000 on credit to Matunda Fish Exporters. So Matunda become debtors. Sold fish 15,000 to Matunda Fish Exporters. So we'll need, because they are debtors, they'll need to pay us. It's very important that we show their name, Matunda Fish Exporters. We always start with the debit. So 15,000, because they are debtors. Debtors are assets. And then sales, we are reducing the stock, 15,000. So we say credit sales. That is the simple explanation that we can give. This was 10th, 11th January. Then you close the book. You close the book like that. Let's move to 12th. January 12th, hired a driver and paid 2,000 in cash. Hired a driver and paid 2,000 in cash. So this could be the wages. Let's just call them wages. Wages, because wages are expenses. We simply say debit wages 2,000, cash, because cash is reducing. Cash is an asset, wages are expenses. So we say payment to the driver. To the driver. Just like that. Close it. This is 12th January. So we continue. We continue. This thing is quite long. So January 13th, Matunda Fish Exporters returned some fish and received a credit note of 2,000. Matunda Fish Exporters returned some fish and received a credit note of 2,000. So remember, Matunda Fish Exporters were debtors. So when they return, we simply credit them. So we'll credit Matunda Fish Exporters and debit the sales returns, because these are debtors. So we'll come here and say debit sales returns. Sales returns. These are goods that are coming back. How much? Sales returns 2,000. So sales returns 2,000. And then Matunda Fish Exporters, they are debtors, so we have to show that they have reduced their debt by 2,000. So this is sales returns. The explanation is sales returns by Matunda Fish Exporters, and then you close it. And this possibly will be on 13th January. So that's how it goes. Yeah, 13th. Then on 16th, received check 7,000 from Matunda Fish Exporters. received check 7,000 from Matunda Fish Exporter. So we are the ones who are receiving checks. So we'll debit our bank account and then credit Matunda Fish Exporters to show that Matunda have now reduced their liabilities. So this was on, sorry, let me just confirm the date. The date is 16th. So 16th, we debit bank account and the amount is 7,000. That's the amount we received from Matunda. And so Matunda reduced their debt, Fish Exporters, by 7,000. So we can simply say payment by check from Matunda Fish Exporters, like that. Then you close. Then we move to the next one. January 18th, purchased fish 8,900 on credit from Agorosare Union. Purchased fish, we are the ones who are purchasing, so goods will come to our stock, to our store. So purchases 8,900, and then we debit purchases, then we credit Agorosare Union. The date is on 18th. So 18th, purchases 8,000, and then credit to Agorosare Union. These are now, they will become our creditors. You simply say credit purchases from Agorosare Union. Agorosare Union, like that, and then you close. That's how it goes. Agorosare Union. I hope the figure is 8,000. Sorry, the figure is 8,900. So we'll come back here and correct on that. This is 8,000, 8,900. 8,900. You have to pick the figures correctly. 8,900, like that. Okay, let's move to the next one. Sold fish 5,300 on credit to Samaki Restaurant. Sold fish 5,300 on credit to Samaki Restaurant. So Samaki Restaurant become our debtors because we've sold to them. They become our debtors. So we debit Samaki Restaurant and credit sales 5,300, and the date is January 19th. So 19th, Samaki Traders 5,300, and then sales account 5,300. We simply say credit sales to Samaki Traders, like that. It will be good to go. So we have our debit entry, we have our credit entry, and we also have what? A narration. That's very important. It's very important to have the narration. Then we go to January 20th, paid Kisumu Cooperative Society 16,000 by check. Paid, we paid, so it means our bank account reduced. So we are going to credit our bank account, and Kisumu Cooperative Society, we are going to reduce his outstanding. Remember, this was a credit we owed him, so we paid him. So we'll debit. We're actually reducing our liability. When you reduce liability, you debit. So we'll debit Kisumu Cooperative Society with 16,000 and then credit bank account with the same amount. So that was, let me assume 20th, Kisumu Cooperative Society, 20,000, we paid them, and then bank, 20,000, bank account, we reduce that amount, so we say payment to Kisumu Cooperative Society, like that. We close. Let me just confirm the date and the amount, and then we'll be good to go. The date is 20th, the amount is 16,000, not 20,000. Sorry for that. So you simply come here and do the correction. This is, sorry. So this will be, yeah, so this is 16,000 and this also 16,000, and then that is the narration, which is on 20th. So we can proceed We can proceed. Let's proceed. On January 22nd, withdrew 5,000 from bank for personal use. So this, when you withdraw money for personal use, we call that drawings. So drawings will be debited, and then of course we withdraw money from the bank. So money in the bank reduced by 5,000. So we'll debit drawings account and then credit bank account, and this is on January 22nd. So January 22nd, Jan, drawings account, the amount is 5,000, and then bank account, we lost 5,000. So this will say personal use, money withdrawn for personal use. I think that would be better. Money withdrawal, money withdrawn for personal use. So we are good to go. Let's move to the next item. This is 24th. So 24th, bought fish 8,300 and paid by check. Bought fish 8,300 and paid by check. So January 24th, bought fish 8,400 and paid by check. So this is simply purchases 8,400 paid by check. So you have bank 8,400 and then you say purchases. Being purchases done by check. So just like that, that is on 24th. Make sure you have a narration. Then we move to the next item. January 26th, sold fish 5,600 to Uthiru Lodge and received a check for 1,200 in part payment. So January 26th, sold fish 5,600 to Uthiru Lodge and received a check for 1,200 in part payment. So that is sales. When you sell, sales, Uthiru Lodge and received a check for 1,200 in part payment. So sales is a credit entry. Uthiru Lodge will become a debtor. So we debit Uthiru Lodge and we also received a check for 1,200 in part payment. So we'll simply come here and say the bank received 1,200. Bank received 1,200. Uthiru Lodge became a debtor to the extent of 4,400, and then the sales were totaled to 5,600. So this is just a record of sales to Uthiru Lodge. The date, make sure you put the date. The date is on 26th. So date is 26th, and that's how the transaction plays out. So bank received that. Uthiru Lodge became a debtor to that extent, and the sales that were made were amounted to 5,600. Let's go back. January 28th, paid salaries 4,700 in cash and water bill 500 by check. Paid salaries 4,700 in cash and water bill 500 by check. These are two different transactions. So we'll just have January 28th, salaries 4,700. So January 28th, January, salaries. Let me just get the figure again. Salaries is 4,700, then water bill 500. 4,700 in cash, then water bill 500 by check. So salaries 4,700 in cash, cash account 4,700. Remember what we said, you have to start with the debit side. So this is a cash payment of salaries, cash payment of salaries, and then you close that account. Then on the same 28th, we have water bill that was paid by check. So we'll simply come here and say again 28th January, water bill on a debit side 500, and then bank, it was paid by check, bank 500. So then you put a narration, payment of water bill by check, payment of water bill by check, just like that, and will be good to go. So water bill is an expense, expenses you debit, bank reduced by 500, so we credit. We said a reduction in asset, you simply credit. Okay. So the next item is January 29, paid salaries 4,700 in cash and water bill 500 by. I think these are repetition. So these are the repetition. So I think we are good to go. NB, all checks were deposited into the bank immediately. That's okay. Okay, so we are good to go. Those are the journal entries to record the above transaction. These are the journal entries. We are already done with all the journal entries. So possibly the second part of this question is to come up to post these transactions in the ledgers. So I may not want to go back again to the questions, but instead I will use what is in the journal entries to post. I will use the information in the journal entries to post in the ledgers. Okay, so let's go. This thing is not responding. Let's give it some few minutes to respond. But I hope you have understood how it's done. Just know the basics. Increase in assets, debit. Decrease in assets, credit. Increase in liabilities, credit. Decrease in liabilities, debit. All expenses, debit. All incomes, credit. It's that simple. It's that simple. So yours will just be to identify if it's an asset or a liability. Let me just delete this so that we can have enough space. Let me close this. Okay, so that is the end of that. So let's come up with the ledgers. Now for the ledgers are T accounts. So we'll have as many T accounts as possible. Definitely we'll have cash account. We'll also have bank account, and we'll be opening other accounts as we move on. So that's how a ledger looks like. It has the credit side and the debit side. And then of course we have the debt column, the particulars, and the amount column. So let's start with the first one. The first transaction is cash account. So we simply read as it is. Like on 2nd 1, 2022, cash account, debit 10,000. So we simply come to cash account. Simply come to cash account. Cash account is here. This is on 2nd. If they have said you debit, just debit. There's no any other thing you're supposed to do. You just follow the instruction. And the reason for debiting was capital account. So 10,000. Then you open. Okay. For now, let's just read because we've already done all the stuff. So let's just read. We've already done all the stuff. We've posted everything. So cash account, debit. You just go to cash account, then you debit. Bank account, debit 40,000. Capital account, credit 50,000. Just like that. Just read as it is because we've already done everything. So come here, 2nd 1, then you say capital account. You always mention the other account that has been has received the opposite kind of treatment. So in this case, it's the capital account that is the reason for this. So capital account, how much? 40,000. 40,000. Then you open the capital account like that. And under the capital account, you also have credit and debit side. So we come here, we say 2nd January, cash account, how much? 10,000. And then the same second one, bank account 40,000, like that. So we've just interpreted what is in the here. We've just interpreted what we have here in the journal entry. So 10,000, 40,000, capital account 50,000. So then we go to the next line, rent 3,500, cash 3,500. You can see rent is an expense, so it's on the debit side. Cash, we credit the cash account, and the debt is on third. So you simply come here and you say third one. You always give the reason for that, for crediting 3,500. Then you open now the rent account. Rent account, credit, debit, and this is 3-1. The reason is cash account. How much? 3,500. That's what the journal tells us, that debit rent account by 3,500. The reason is cash. So I'm just interpreting what is here. You can see rent account, debited, credit, cash account. That's what we've done. Then debit purchases, credit Kisumu Cooperative Society with 36,000. Debit purchases, credit Kisumu Cooperative Society. So we come here. Do you have a purchases account? We don't have. So we open one. We say purchases account, credit, debit. Then we say on fourth one, Kisumu Cooperative Society, 36,000. Then do we have a Kisumu Cooperative Society? We don't have. So we open Kisumu Cooperative Society account. This is a creditor. So credit, debit. Then we say the reason for this is purchases account. How much? 36,000, like that. Credit Kisumu Cooperative Society. That's simply what we are doing. We are crediting Kisumu Cooperative Society. We have credited Kisumu Cooperative Society. You can see Kisumu Cooperative Society credited. So we go to sixth, cash account, sales account. Do we have cash account? Yes, we already have. So we simply debit cash account and we credit sales account with 58,000. That is on sixth. So we already have cash account. So simply come here, sixth one, and say the reason for this is sales account, 58,000. Do we have sales account? We don't have sales account. So we open sales account there, credit the debit, and we say this is on sixth one. The reason is cash account. How much? 58,000, like that. So we have credited sales account as indicated on the journal entry. On seventh, debit furniture, credit bank account. Debit furniture, credit bank account. The amount is 2,700. So you simply come here, debit furniture account. Do we have furniture account? We don't have furniture account. So we'll open furniture account, credit, debit, and we say this is seventh one, bank account. How much? 2,700. Then do we have bank account? Yes. And the instruction is that we credit bank account, and the reason is furniture account. How much? 2,700, like that. Then we go to the next item. This is on 9th now. Debit bank account 25,000, credit cash account 25,000. So we have all of them. That was on 9th, if I'm not wrong, 9th. Debit bank, credit cash. So you simply come here. Debit bank. Do we have bank account? Yeah, 9th one. The reason is cash account. How much? 25,000. The reason here we've been told to credit, and this is the reason is bank account. How much? 25,000, like that. Then we move to the next item. Debit purchases, credit bank, credit Cola Fisheries. So debit purchases by 20,000, then the rest half. So we simply come here. That was on 10th. We have purchases account. So simply come here, 10th one, purchases. We have bank account 10,000, then Cola Fisheries 10,000. Yeah, that's the composition because we bought goods worth 20,000. So this is how it is. Then you come to bank account. The instruction was credit bank account. So we credit bank account. This is 10th one. Purchases. How much? 10,000. Then we come to Cola Fisheries. Do you have an account for Cola Fisheries? We are supposed to credit Cola Fisheries. Open an account for Cola Fisheries. Cola Fisheries. So credit, debit. We say on 10th one. This is purchases. How much? 10,000, like that. That was the instruction that we credit Cola Fisheries with 10,000. I think you can see that one here. Credit Cola Fisheries 10,000. So that's how it is. Then 11th, debit Matunda 15,000, credit sales. 11th, debit Matunda, credit sales with 15,000. So we simply come here and we say Matunda account, debit, credit. Matunda is a data, so on 11th we say sales 15,000, and then we go to sales account. I think we have it. This is on 11th one. We say Matunda 11,000. We sold goods to Matunda worth 11,000 shillings. Then we go to 12th. Matunda fish exporters, that was 11th. 12th, wages and cash. Debit wages, credit cash. Debit wages, credit cash. Do we have wages account? We don't have wages account, so we open a wages account here. And wages is an expense, wages account, so credit, debit. Please say 12th January, cash account, because we paid by, that was 2,000. So we come to cash, cash here. We say on 12th January, wages account. It's wages that has made us lose that 2,000 shilling. So we come to 13th, sales returns. We debit sales returns, and then we credit Matunda fish exporters with 2,000. You simply open sales returns account. Sales returns. Sorry for that. Sales returns account, credit, debit, and we have been told that goods were returned worth 2,000 shillings, I think. So we will debit sales returns, and credit Matunda with 2,000. So debit sales returns, that was on 13th. Matunda 2,000. So we come to Matunda because we already have Matunda here. We simply say 13th sales returns account 2,000, like that. Hope the date is 13th. Let me just confirm the date. That was 13th. So let's go to 16th. Debit bank 7,000, credit Matunda 7,000. We received money from Matunda. So debit bank, this is 16th one. The reason is Matunda. We received 7,000. Then credit Matunda. When was that? 16th. So we say bank, how much? 7,000. Like that. Then we go to the next item. On 18th, purchases 8,900, Agorosare 8,900. So purchases and Agorosare. Agorosare becomes a creditor. So purchases, that is 18th. Agorosare 8,900. So we have to open here an account for Agorosare We open an account for a grocery account, credit, debit, and we say purchases. This is 18th purchases. How much? 8,900. Okay, so we go to 20th. Kisumu Cooperative Society, 16,000. Bank account, 16,000. So we debit Kisumu Cooperative Society with 16,000 and we credit bank account with 16,000 on 20th. So we don't have Kisumu. I think we have Kisumu Cooperative Society. Yeah. So we simply debit Kisumu Cooperative Society, 20th. Debit Kisumu Cooperative Society, 20,000. This is bank. And then we open the bank account. This is 20th one. We say Kisumu Cooperative Society, how much? 20,000. Like that. We are just interpreting. We've credited the bank and debited Kisumu Cooperative Society. Sorry, the figure is 16,000, not 20,000. So we'll just change this to 16,000. Sorry for that, 16,000. And then here, Kisumu Cooperative Society, we have 16,000. Like that. Okay, let's move to 22nd. Drawings 5,000, bank 5,000. So credit bank 5,000. This is 22nd. The reason is drawings 5,000. Do you have a drawings account? We don't have, so we simply come down here and open a drawings account. And we say on 22nd bank account, that is the reason. How much? 5,000, like that. So then let's move to the next item. On 24th, purchases 8,400, bank 8,400. That is on 24th. So 24th, purchases 8,400. Then we come to purchases on 24th. Bank is the reason 8,400, like that. So we have already posted that. We are just interpreting what is in the journal. Then we come to 26th. Debit bank, credit Uthiru Lodge. No, debit bank, debit Uthiru Lodge, and then credit sales. So we come to bank, we debit 1,200. Bank, debit 1,200. That is on 26th. So bank account 1,200. Then we go to Uthiru Lodge. Do you have Uthiru Lodge anywhere? We don't have Uthiru Lodge, so we'll open an account for Uthiru Lodge. This is 22nd, and we need to debit that. The reason is sales. So then we go to sales account. This is on 26th. So you can either have the whole of it, or just you can talk of bank 1,200. In the same day we have Uthiru 4,400, which gives price to the entire amount of 5,600 that is here, that has been captured here. So that's how to go about it. And then we have on 28th salaries 4,700, cash account 4,700. So we credit cash, we debit salaries. We have salaries account. For cash we have, so we simply say 28th one, salaries 4,700. Then you can come here and open a salaries account. And this is a salaries account. This is a salary is an expense, so it's a debit entry. So you simply say cash, how much? 4,700, like that. Then last on the 8th, have a water bill which was paid by check, amounting to 500. So you simply open an account here, call it the water bill account, credit, debit. Because it's an expense, you simply say 28th, the amount came from the bank and it was 500. Then you go to the bank and you credit that account. So 28th, the reason is water account, how much? 500. That's what we have there, that you debit water bill 500 and you credit the bank with 500. So we are done, and as you can see, it's quite a lengthy question. So what we need to do is to close the accounts. How do we close these accounts? I will start with this one. This one is quite simple. Just put 2 double lines, 500. Then you say on 31st January, you say balance carried down is 500, just like that. So we have closed that one. It means this is what will now go to the trial balance. Alternatively, the other way of closing it's to get the totals, 4,700, 4,700. Then you say 31st one balance carried down is 4,700. Then you come here and say on 1st February balance brought down will be 4,700. So this is closing now the books. The same thing as balance carried down 500. So you can see these ones, their salaries and water bill are the same. So in such like a case, you can always come back here again and say on 1st February balance brought down will be 500 shillings. So these are 2 different ways of closing it. So if you go with that, then it means here automatically will do like something like that, 4,400. Then say 31st January balance carried down is 4,400, like that. And then you can come here and say on 1st February balance brought down is 4,400. That's how we close. So the same thing here, 5,000, 31st January balance carried down 5,000. Then 1st February balance brought down 5,000, like that. That's how we go about it. The same thing, 2,000, 2,000. So just say 2,000. 31st January balance carried down 2,000. 8,900. 8,900. 31st January balance carried down 8,900. You realize now this was a creditor. So look at the way we are doing it has changed. Balance brought down. The balance is on the credit side. So if we have something like this, just get the total. Get the total. This is 15,000. This is 15,000. Make sure you leave some space for balance carried down. So this will be on 31st. You simply say balance carried down, and the difference between this and this is 9,000, 15,000. So you have 6,000. Then you come here and say 1st February balance carried down is 6,000, like that. Sorry, this is balance brought down. Balance carried down 6,000, balance brought down 6,000, like that. So here again we close 10,000, close 10,000. 31st January balance carried down is 10,000. Then you say 1st February balance brought down is 10,000, like that. That's how we close. Case like this, just get the total, get the total, get the total. Then say 31st January balance carried down is the total of that. So we can just add that 6 plus 10 plus 10, that is 56, plus 89 plus 84. Add the total. That will give you 75,200. So So 75,200, if I'm not wrong. So 75,200, 75,200. That's how you go about it. Then you say 1st February balance brought down 75,200, and you can see it's a debit balance. It is a debit balance because purchases always a debit balance. So 2727 balance carried down 27, and this is on 31st January. 1st February balance brought 7, like that. 27, like that. Same thing here. 2,000. These are wages. Wages are a debit account because they are an expense. So simply say that first this is balance carried down. How much? 2,000. Then 1st February balance brought down 2,000, like that. I hope this is very clear. And 3,000, 3,000 balance carried down. This is at 1st January, 1st February balance brought down 3,000. Same thing under KCS. KCS is Kisumu Cooperative Society. So I think we had for Kisumu Cooperative Society. Don't know where this one is coming from. So in such like a case for Kisumu Cooperative Society, get the side with the highest figure. It will be used as our balancing figure. That's 6,000. That's 6,000. That's the balancing figure. The difference, put it there. Balance carried down. So this will be on 31st, and then obviously 1st February balance brought down will be 20,000. Notice the difference. Balance carried down, balance brought down. Case like this one of sales, just get the total, and the total will be used on both sides. So for the sales account, the total is 83,900. So 83,900. You have it there. 83,900. 83,900. So balance carried down 83,900. This is on 31st January. On 1st February, balance brought down is 83,900, like that. So here we have 50,000. Close it down. 50,000. Close it down. 31st January, balance carried down is 50,000. On 1st February, balance brought down is 50,000. Just like that. So for this cash account, get the total. Make sure you leave some space for the difference. The balancing figure in the cash account is the side which has the highest figure. The side with the highest figure. And I believe in this case we have for cash account we have 68,000. So this is 68,000. This is 68,000. So balance carried down. You can do the difference. What is missing to get 68,000. And if I'm not wrong, is 28,100. So this becomes our balance carried down on 31st January. So that means 1st February balance brought down will be this 28,100. It's the same thing with the bank account. Get the side with the highest figure, and it will be used as our balancing figure. So the debit side has the highest figure. The debit side has the highest figure of 73,200. So 73,200, 73,200. Then of course 31st January, get the balance carried down, which will now be our balance brought down on 1st of February. The difference is 40,200. So we have here 40,200 as our balance carried down and 40,200 as our balance brought down. And I hope you've seen the balancing figures. They are always on the same line. So with that, we have finished the question. It was quite a lengthy question. but that's how it's supposed to be done. After that, you simply post the transactions to the trial balance to confirm if everything is okay. Confirm if everything is okay. Remember what we said about the trial balance. So that is it. That is what was expected of you in question 2. 15 marks for the ledgers, 10 marks for the journal entry. Let's meet in question 3. Thank you.